Africa is using the World Economic Forum Davos 2011 as an opportunity to raise the investment profile for the African continent. Our next guest from WEF Davos needs no introduction. He's Aliko Dangote, the chairperson of the Dangote Group and one of Africa's foremost investors, particularly in the manufacturing space. Mr. Dangote, thank you very much for your time. WEF discussions seem to be focused around getting all sides to work towards common objectives of shared economic growth. What are your impressions of WEF this year?
Well, I think the impression is quite great. We've had quite a lot of discussion, especially towards, developing markets, which really involves Africa. And I think everybody is upbeat about what is going on in Africa.
Okay, just talking about this idea of shared growth and trying to get the whole world reinvigorated, investments coming through to the emerging markets, employment in developed economies, all those kinds of things. Where does Africa fit within this continuum?
Well, Africa fits in the most important sector of that, because if you look at it in Africa, there are so many opportunities. There are opportunities where you can actually go and invest in either in agriculture, in infrastructure. We are in dire need of infrastructure all over Africa. Power is one of the greatest issues in Africa, and I think a lot of investors are actually focusing, especially when they look at the return of investment. Return on investment is very, very high.
I think one of the biggest limitations for Africa is the fact that we grow in an era where emerging markets have come to the fore, but we're not competitive enough, particularly in the area of manufacturing. Now, you're a major investor within the manufacturing circle. What do you make of the limitations?
Well, part of it, when you look at it, really, it is to do with also cost of funds and also the market. But right now, we have the market and a lot of interest, cost is down. Most of the countries that we have in Africa today, they are not really owing much money, after the debt forgiveness. A lot of them, they have capacity now to borrow. They have capacity to borrow at much, much lower rates compared to before. And I think with that, we'll be able to actually, especially with the new technology, with the trained number of people, and it costs much less to produce in Africa than the other countries. But you see, if, for example, other countries' intentions are to dump in our market, then that is totally a different issue. Then we'll not be able to compete. I mean, in countries, for example, like Nigeria, we have where when you export something which is locally made, you are going to be given 30% of export incentives. So if you are dumping another country, there's no way somebody can compete because you already have a margin of 30%.
Right. Now, talking about Nigeria, one of the biggest limitations is that manufacturing could be a driver of growth and employment, but it constitutes less than 3% of GDP. Yes, it's all these issues around infrastructure and funding. The CBN is trying to address that through an entrepreneurship fund, but what more needs to be done?
Well, what we actually need to do in Nigeria is actually to make sure that we prop up our power generation and also the distribution. Once the power is there, then definitely we'll be able to prop up that sector. Central Bank in Nigeria has done pretty well by giving over $3 billion to the manufacturing sector, to pay very low interest, I think about 7% of interest, and long-term funds. But you see, if you do that, then still you need to have the power. It's not everybody that will be able to generate its own power. Yeah. But I think the government is doing a lot on that in terms of trying to prop up our generation from 3,000 megawatts to about 10,000 in the next 3 years or so.
I mean, you're quite bullish about African growth, and so are the IMF, and so is the African Development Bank, and people expecting Nigeria to grow above 7% and other African countries to beat the African average. But with threats of inflation, for instance, with a low consumer base in Africa, and the fact that we're not very productive, what we are exporters of raw material, but we're not productive economies. Do you think these growth rates are sustainable?
Well, the growth rates, they are sustainable, especially if we can look at areas where we have an advantage, areas of agriculture, areas of infrastructure.